Jeremy, I'm about to roast you like you've never been roasted before. You deceptive, slimy, disgusting, grifting, ugly, fat loser! Welcome back to Strongman Personal Finance. My name is Christopher Belly. I'm a certified CPA accountant. I'm a fake boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And we're actually going to do a two-part roast of Jeremy Financial Education's most recent video. Now, I'm currently in the car, but I want to save the second half for when I get home, because then I'll have my computer and I can play clips and I can destroy you, boy. So what did old Jeremy LaFefe talk about that really pissed me off? Well, apparently, if you're buying index funds, you're just a moron that's following the herd. That's right, ladies and gentlemen. Index funds just always go up, and they're easy money. And basically, if you follow the herd, you're eventually going to lose all your money. And you know who's going to win in the future? Is it going to be the guy that maxes his tax advantage accounts and dollar cost average into total world index funds? Or is it going to be some dumb idiot that pays Jeremy Financial Education thousands of dollars to learn how to buy stocks that drop 60, 70, 80%? Oh, well, obviously the person that listens to Jeremy's going to win bigly. So Jeremy mentioned what he thinks may potentially be a lost decade, where stock returns are basically flat for a decade. Lost decade. You get no returns. No returns. Okay, number one, you freaking moron. You could select any time period and find a lost decade. A period of time where stocks return zero. But what you also have to factor in is dividends. You could have a stock chart and you could point to point A to point B and say, well, over this period, if you had bought on this exact date and then 10 years later, the stock price was this, you'd have no returns. Well, number one, dividends aren't reflected in the price of the index, okay? When a dividend's paid out, the index drops by the amount of the dividend, or the underlying companies drop by the amount of dividend. So that, number one, is not reflected in the returns. Number two, Jeremy, you have no idea if there's going to be a flat decade. You freaking moron. He was like, oh, I think there's going to be a 25% chance that there's going to be a short splat decade. How do you freaking know that? You just saw that in a freaking news article, you idiot. All this guy does is pull random numbers out of his butt. Oh, there's going to be a 25% chance of a flat decade. Jeremy, nobody freaking knows, okay? You act like you're this freaking investing genius, and you can do these like probability weighted, projections of the stock market to tell yourself when what percentage is going to be, what percentage chance we have of having a flat decade. God, you're freaking stupid, okay? Just stop making up percentages. You don't know what you're talking about. Number three, Jeremy, freaking idiot. If you're dollar cost averaging into index funds, you're not going to have a flat decade, okay? And you pulled up the 2000s to 2010. What happened? Well, we had the dot-com bubble, and then we had the Great Recession, the housing crash. And if you had bought during the dot-com bubble, and then, you lived through the housing crash, well, you'd have zero returns. Well, yeah, if you had one lump sum investment at the beginning of that 10-year period, and then you didn't buy any more stock or pieces of the index, okay, you'd have flat returns, not counting dividends that are reinvested, obviously. However, moron, if you buy indexes, you're dollar cost averaging over your lifetime. So if the stock market, let's say when the stock market dropped after the dot-com bubble, you would have been buying the dip all the way down every 2 weeks, every month. And as the market went up, you'd be buying then and buying then. And how it shakes out is you would actually have positive returns if you're dollar cost averaging. You freaking idiot. Nobody, unless you're a clown, just buys at one time and then just holds. Now, maybe the shares you bought at that time as your dollar cost averaging, maybe that lot of shares of the index is flat. Okay. But if you're dollar cost averaging, your basis changes. God, you are so stupid, Jeremy. I really, really don't like you, okay? And we all know you're attacking the indexes because, number one, you've underperformed the index. You're an idiot. You've bought the worst stocks imaginable in human history. You got lucky with one stock, Tesla. It went up, and now you're claiming you're a freaking genius, and you like to flash your Tesla gains. What is one of the smallest investments you ever made, and you got extremely lucky. It's obvious, okay? All the stocks you've bought, Tattoo Ballsack, Corsair, blah, 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 blah. You have no clue what you're doing. You have no idea how to value a stock. And then he's like, oh, well, growth stocks are going to massively outperform the actual index. And, he's so stupid. And he was acting like there aren't growth stocks in the index. You freaking idiot. The index, the total market index, buys every stock in the index, or the vast majority of them, to track the index. That means you have growth stocks and value stocks, okay? So even if growth stocks do outperform, well, I have the growth stocks in the index. God, you're stupid. And what you don't understand is, let's say growth as a category outperforms in the next decade, which nobody knows, you don't know. I mean, especially you don't know. You're just stupid. If growth outperforms, did you buy the correct growth stocks? I don't think you did, Jeremy. I think you bought trash stocks that you literally looked at the revenue, and you looked and said, oh, is this exciting and futuristic? And you bought. That's all you did, okay? If growth stocks do outperform, which, anything's possible, you don't have the growth stocks that are going to outperform, okay? Very few stocks, a small minority of stocks, generate the vast majority of the returns in the market. If you look at the largest 10 companies in the U.S., Apple, Microsoft, Amazon, blah, 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 those stocks have carried us, okay? And if you hadn't bought those stocks, if you bought a bunch of trash stocks, you wouldn't get nearly the returns that the index did, okay? You are so stupid. Jeremy, stop, okay? You hate index funds because you cannot sell your stupid garbage core/clownish Discord and your portfolio reviews. Oh, you don't have enough tattoo chef in there. Why do you have VTMT? Sell, tattoo chef, buy. Just stop, dude. You're embarrassing yourself. You are an embarrassment. Now, when it comes to YouTubers, a lot of YouTubers are dumb. You are the dumbest of the YouTubers. You are scum. You stink. You smell like pee-pee. You don't belong on YouTube. Get off of YouTube. Stop posting your random crap just so you can generate ad revenue. Okay, because you're just absolutely screwing people 100%. And you know what else, Jeremy? Let's talk about the lost decade. I want a lost decade. I do. I want stocks to get absolutely obliterated because you clearly showed us in your example that it looks like after a lost decade, the next decade, the stock market seems to do pretty well, okay? If the stock market underperforms and the stocks are undervalued in the index and you're buying them consistently, and eventually you get that bull run where stock kind of return to their intrinsic value, guess what, Jeremy? You make a freaking fortune, okay? So if I'm buying over the next 10 years, let's say stocks just go down and down and down and stay flat for the next 10 years. Good, absolutely good. I will not change a single thing that I'm doing with my investment plan. I will continue to accumulate shares of the Vanguard Total World Stock Market Index. And in 10 years, when this flat decade, 25% probability. Imagine Jeremy, he can't even freaking spell. Can you imagine him doing math? Oh, the weighted average probability of... When the index eventually goes back up, which I think it will at some point, I think the world will be a better place in 20, 30, 40 years, I'm going to make a fortune, you moron. So the short-term performance of the index doesn't matter to me. I will be 43 in 10 years. I'll still be working and contributing. And imagine if I tossed $300,000. Let's say I save 30 grand a year, which not quite there yet, but let's say I save 30 grand a year over the next 10 years and we're in a flat decade and I lost money, quote unquote. Well, now I have $300,000 of cost basis. And if the market goes on a massive tear, I'm going to be a freaking millionaire. So yes, I hope there's a flat decade. So don't listen to this idiot. He's literally trying to scare you out of the index. And okay, if you're in the S&P 500, maybe it isn't a bubble. That's why I have VT. He's trying to scare you out of the index, which has low cost, broad diversification, and it's very tax efficient, to convince you to buy a bunch of garbage. And on top of that, pay him money to sign up for his course. Jeremy, you are... the words I want to say, I can't say. Because, of course, I want this video to be monetized. But, all right, guys, that's it. There will be a round 2. I'll be reacting directly to Jeremy once I get home and do some tutoring because, I have legitimate skill and I charge people for my time. I'm not a grifter. But whatever. See you guys tonight. Cheers!